Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SHANDONG XINHUA interim report. SHANDONG XINHUA Pharmaceutical Company Limited offers a diverse range of businesses and services across various industries. Some of its key offerings include bulk pharmaceuticals and chemical products, contract manufacturing services for active pharmaceutical ingredients and intermediates over-the-counter, OTC, and generic drugs, prepared Chinese herbal medicine, and traditional Chinese medicine raw materials and intermediates internet data, sales, and information services for pharmaceuticals and medical devices, veterinary drugs and fodders, chemical raw materials, and steroid system, APIS medical project design and development property management, and real estate leasing certification, and import/export business electrical equipment, engineering and installation, mechanical and electrical equipment, manufacturing sale of controller switching equipment. The company's extensive portfolio caters to various sectors, including pharmaceuticals, chemicals, medical devices, and more. The significant increase in SHANDONG XINHUA Pharmaceutical Company Limited's stock price by 36.36% over the past year can be attributed to several key developments and positive news. The company's new drug registrations, including sildenafil tablets and ursodeoxycholic acid capsules, have signaled future revenue growth and market expansion. Favorable centralized procurement policies have also created a more favorable market environment for pharmaceutical companies, reducing uncertainties and improving profitability prospects. Additionally, the company's consistent long-term earnings growth and reinvestment strategy have contributed to its strong performance, outperforming the industry average in net income growth. These factors collectively fostered investor confidence, driving up the stock price. The primary drivers of revenue growth and decline can be summarized as follows. Revenue growth drivers. 1. Launch of new products and expansion into new markets. 2. Increased production and sales of key APIs and specialty products. 3. Technological innovation to drive product upgrades and technical breakthroughs. 4. Obtaining drug approvals for APIs and new preparation products. These drivers contributed to a 2% increase in revenue from operations, a 62% increase in investment income, and significant growth in government subsidy income. Revenue decline drivers. 1. Decrease in sales of preparation products in Perigo International. 2. Decrease in service fee in Centrient Pharmaceuticals, Zibo Co. Limited. 3. Operating losses in the pharmaceutical segment. 4. Decrease in other operations revenue. These drivers contributed to a 3% decrease in company revenue and a decline in operating income across various segments. Net income and profit margins. A turbulent ride, the company's net income has experienced a roller coaster ride, with fluctuations of over 200% in some quarters. In page 28, it increased by 202.49%, while in page 44, it decreased by 15.3%. This trend continued with decreases of 5% and 134% increases in subsequent pages. However, specific subsidiaries saw declines of up to -27.7%. Profit margins have also undergone significant changes. Initially, they improved due to government subsidies and asset disposal, page 5. Nevertheless, a likely decrease was observed in page 27, attributed to increased operating costs and reduced selling expenses. A notable drop of 2.1 percentage points from 18.7% to 20.1% occurred in page 144. Conversely, profit margins increased due to substantial non-operating income growth and decreased expenses in page 150. The company is generating a significant increase in positive operating cash flow, with a substantial jump from 77,401,054.87 RMB in 2024 to 234,132,352.73 RMB in 2025. This indicates a notable improvement in the company's ability to generate cash from its core operations, suggesting a strong financial health and stability. The company's debt level has undergone significant changes in the past period. While short-term loans decreased by RMB 327 million, and long-term loans also saw a decrease of RMB 116 million, notes payable increased by RMB 90 million, and lease liabilities rose by RMB 328,000. These mixed trends suggest that the company's overall debt level may not have changed significantly. However, interest expenses have seen a notable increase of 19.6% to RMB 21.4 million. This rise in interest expenses is likely due to the increased debt levels, particularly notes payable and lease liabilities. The sensitivity analysis also indicates a potential increase in interest expenses by approximately Rm 850,000. Based on the financial summary, it appears that the company has indeed paid dividends, as confirmed by two separate sources on pages 33 and 47. However, there is no mention or indication of share buybacks within the provided information. Concerns about inventory buildup or supply chain disruption exist. The financial summary reveals several points of concern regarding inventory buildup or supply chain disruption. On page 111, the total inventory value increased significantly from opening to closing balance. Additionally, on page 120, there is a mention of inventory buildup, specifically for construction materials not provided. Furthermore, on page 144, revenue and cost discrepancies are noted in various product categories, including chemical raw materials and pharmaceutical intermediates. These imbalances may indicate potential supply chain issues or inefficiencies. On page 156, a decrease in inventory is reported, which could be a positive sign. However, the prior period saw a substantial increase in inventory, suggesting that the company's inventory management may still be a concern. Lastly, on page 195, operating costs for chemical intermediates and raw materials, as well as pharmaceutical preparations, have increased significantly. These rising costs may indicate supply chain disruptions or other issues affecting the company's ability to manage its inventory effectively. That concludes the financial summary for Shandong XINHUA. Feel free to comment below, and I will be happy to answer them when possible.